Hi, as part of our educational series, my trading partner Kayong and I will be explaining one of Forex traders' most powerful tools, the indicators. They are the technical indicators which will be covered by Kayong, but don't forget about the economic indicators which will be covered by yours truly. My name is JD and in this video I'll be explaining the non-farm payroll. This economic indicator is probably the most famous of all the economic indicators. The non-farm payroll, or in short, NFP, is one of the most watched data released by Forex traders all over the world. If you're a Forex trader already, chances are that you have already heard of this term, NFP. So what does it mean? How do we interpret it? And how do I use this in Forex trading? Let's break down in this video. Number one, it's actually part of a series called the Employment Situation Report. The Employment Situation Report is published by the United States Department of Labor as part of their mission of ensuring the overall well-being of the nation's salarymen and women. In order to do so, statistics are important. There are altogether 4 reports, namely number 1, unemployment rate, 2, average work week, 3, average hourly earnings, and finally our hero, the non-farm payroll employment. The non-farm payroll employment directly provides readers the number of additional jobs added from the previous month. Because it is released on the first Friday of every month, it has a high level of influence due to its timely release. As the name implies, it does not take into account workers in the farming industry but also from the non-profit and government sector. Yet despite this non-inclusion, the report actually more or less covers about 80% of workers producing the entire US GDP. Number 2, what does this mean for the US economy? Information of how many workers are added into the economy is a crucial information. Let's start from the beginning. Firstly, an increasing NFP means that businesses are hiring more. This fact itself implies that if businesses are optimistic about the economy and the business is making a lot of money, their profitability is high, hence the business's decision to hire more. As a business owner, you would not want to hire if you cannot afford a new worker, right? This directly shows that the economy is thriving. Secondly, the increase in number of workers in the economy also means that there are now more people with salary. This means that the number of people in the economy who can spend money has now gone higher. As a consumer, you wouldn't want to spend money on a hefty $800 to buy a new iPhone 7, for example, unless you have salary, right? So demand for goods grow, fueling growth in the economy. Thirdly, these additional purchases simply means companies are in turn earning more profits. With even more profits and demand for goods and services, they are now even more motivated to hire even more workers in the first place. So this extremely virtuous cycle reinforces that the market is functioning well and strong, and finally all this increase in economic activity leads to one important side effect to the economy, and that is inflation. Number 3, finally, what does this mean to my Forex trading? This is where central banks of the US, which is the Federal Reserve System, comes into the big picture. As mentioned above, as a result of a healthy, growing economy where number of workers continuously grow and spending increase, prices becomes more and more expensive. We have all heard it before. Inflation means that there is an overall increase in price level of all goods and services in the economy. When you were young, a kopi peng, which means iced coffee in Singapore and Malaysia, probably cost just $1, but now it can be $1.50 now. You wouldn't even be surprised. Now the Federal Reserve System of USA doesn't like that, or rather they don't like too much of it. It is their job to keep the annual inflation rate to be around 2% level. If it's too high, they will do something to lower it, and vice versa is true. So what they will do is called the monetary policy, and it is a tool to influence economic activity. And when inflation becomes too high, they will introduce a higher interest rate to stop businesses from going overboard on their investments. You see, when interest rate becomes higher, it becomes more expensive for businesses to run and consumers spend less, since big ticket items like houses and cars becomes more expensive to afford. As a result of such a monetary policy in the US economy, the entire economy slows down a little. So again, coming back to Forex, what does this mean to us? As a side effect of the Federal Reserve System increasing interest rates, more investors would flock to the US assets or US dollar, as it is now paying out more interest, increasing demand and hence the price of US dollar itself. This is how the NFP increases ultimately leads to an increase in the value of the US dollar. So in summary, the better the NFP, the higher the US dollar value is. The lousier the NFP, the lower the US dollar trades. Can knowing this make money in the Forex market? The answer is a big resounding yes. But sometimes looking at just a non-farm payroll is not going to bring you very far. You must be able to look at it from a big picture point of view, and that essentially is fundamental analysis. Learn how you can make use of the fundamental analysis in our FX fundamental analysis and market sentiment masterclass and trade the market with clarity. My name is JD and I hope you enjoyed the video. I will see you in the future installments of the Indicator series.